Welcome back to today's Retirees with Certified Financial Planner Wayne Maslick of Great Lakes Benefits and Wealth Management. Today we're talking about some questions and some concerns that are on the minds of retirees. And the first one, Wayne, as we look at our screen, is the stock market going to crash anytime soon? We're at record highs.
Yeah, I mean, you see it every day. You read about it. Retirees are worried that they're going to lose a big chunk of their investable assets in a market crash or big market correction.
2008?
2008, the early 2000s. You know, the market has a history of reaching highs and then pulling back. And we're at record highs. And we've been teetering at record highs now for a while, a year or so. The S&P just recently went over 1,900 points. It's never been there before. Not that the market's going to crash. I don't want to be preaching doom and gloom, but the market does grow and pull back, grow and pull back. How much it pulls back depends on the economy, political things that are going on. We talked before the show. This is an off presidential midterm election year. Okay, every single one of them. And they happen every 4 years.
Sure.
Since 1962, there's been 13 of these elections, non-presidential election year.
Okay. 13
times, every time, the market has pulled back and hit a bottoming out process.
Wow.
And pulled back anywhere from 8%, say, up to 45%.
Wow.
That's big.
Wow, yes.
Okay. The good news is every single bottoming out process since 1962 in these election years, recovered with a nice rally. And the rally lasted anywhere from 16 months to, I think, 93 months. So 13 times, every single time that it happened, we had a pullback and a rally.
Wow.
Isn't that interesting?
That is very interesting.
Now, we don't know if we're going to have one this year.
Sure.
But this is history.
Right.
And we always like to look back.
Absolutely. So if it does happen, and my funds are wholly or mostly invested in the stock market, I'm going to take a pretty good hit.
Oh, you're going
Possibly.
to take, if it happens, you're going to take a huge hit. But that's why, I always preach having a proper risk and safe ratio, the rule of 100. So you don't want to have too much money in the market anytime.
Sure.
You want to have enough that it's comfortable, and that if you do take a hit, it's not going to affect your retirement or your standard of living.
Sure.
But yeah, you gotta be able to handle those things.
Right. Well, that's why it's important for folks to call Wayne and sit down and see where we're at, risk, safe, tolerance, rule of 100. Figure that out. 866-626-3990. So the next question it leads right to is, again, with the stock market, Wayne, is should I be getting out of the stock market?
When are you supposed to sell?
When it's at the high.
When it's at high, right? Buy low, sell high. So, and I'm not saying get out just to get out, but if you have too much in the markets, or you have substantial gains, and you want to take some steps to get more conservative or to get to safety with some of your money, now's a perfect time. What better time than at record highs?
Sure.
You don't want the greed to set in where I'm making a killing and now I can make more. I'm just going to, no, if you know you're taking too much risk, if you know percentage-wise you have too much of your assets at risk, or the assets you have at risk are just too aggressive, then now's a great time to pull back.
Right. Now, I remember I passed a program that we did. You explained that as your asset grows in the stock market, then you need to adjust your risk and your safe money because now, because of the growth, you may have too much at risk.
Yeah, I mean, if you have, just say $100,000 and you're a 60-year-old, and maybe a couple years ago you got your safe risk ratio in line where we had 60% in safe investments and 40% in risk. Well, the 40% was $40,000. So if we're up in the, say, 30% over the last couple years, well, now we have $52,000. So if the safe money didn't grow as much, which it won't, it'll never grow 30% in 2 years, your safe money. So we pull some back and we get that to the safe side.
Right.
We all, as we get older and as we make or lose money, we have to adjust that safe risk ratio.
Right. Well, that's, again, a reason for them folks to pick up the phone and call your office and set up an appointment. Okay, this is one that I think is very fascinating, Wayne, because you see all the time. You see all the actors on TV, and I mean, if you watch any of the news shows, the news cable networks,
talk
and things
radio,
like that, talk radio, it is everywhere.
Yep.
And should I be buying more gold and silver, or any?
Right, and I get that question almost daily from folks I meet with, and the answer is it depends, right? It depends on you. It depends on why you're buying it. You know, some people say, well, the dollar is going to collapse. So I'm afraid that I'm not going to be able to buy gasoline or food. So I want to have some gold and silver at home. Others just feel they need to get into it as an investment. You know, we talk about diversification versus asset allocation. Well, that's a good way to diversify. Have some gold and silver. It's not a bad idea, but just don't get too overloaded on it.
Sure.
And don't think that just because you have some gold or silver and things do go crazy and the dollar collapses and there's calamity all over the streets, because if you have some gold, you know, and this guy over here has a gun, you ain't going to have your gold anymore.
That's right.
Or if they know you have it.
Right.
So don't think, you know, you're not going to have it for long.
Right.
So and that's doom and gloomers. Do it as an investment, you know, maybe up to 5% of your total portfolio. Maybe have some at home just for some peace of mind, along with some cash. But you know, don't run out and buy, you know, gold or silver. Just think of the people that did it a year or two ago when gold was at $1,900 an ounce.
Sure.
It's at $1,200 an ounce now.
Right.
Those people took a beating.
Right.
You know,
right.
They still own it, right? And now they're down huge.
So it again, and this is what Wayne's program is all about, folks, and why it's important to pick up that phone, 866-626-3990, and sit down and talk with someone like Wayne. As Wayne has said on this program many, many times, he is an independent, totally independent. He doesn't have to go by, you know, some corporation behind him somewhere that says you can only sell this, or you can only work with this, or you can only do this. Totally independent. The consultation to come in and sit down with you is absolutely free. Absolutely,
and we want to add a certified financial planner designation. You know, being a certified financial planner, that's the gold standard in the financial industry. You know, it's not just a weekend designation. It takes a lot of schooling and a lot of education, and you got to pass some pretty rigorous testing.
Sure, absolutely. When we come back, we're going to talk about more about these talking points, 7 points that retirees questions that they are asking right now. We'll be back right after this.